Folks, I don't know if you're aware of this, but there was a time in the not too distant past where you can only get 4 investment property loans. And today, there's, so you know, the number is 10. And if you're married and you want to play it, your husband, wife, you could technically get 20 today. I want to fast forward 6 months, and I want to play a what if game with our guest, Elise, and say, what happens to the real estate market if investors only can get 4 residential loans? I'm not saying this will happen. I'm just saying, hey, what happens if the government decides that everybody should own a home and that investors are evil? And one of the levers they could pull is the number of investment loans you can get. So, Elise, congratulations. It's summer of 2023. FHA, VA, all these other things have just come out and said we can only do 4 investor loans. What's going on in the real estate market? Are you shocked? What do you do? What are you thinking?
Woo. Okay, you just dropped a bomb. Are we going to ping pong, giving a solution each? Is
Sure.
that how we're going to?
Yeah, why
Okay,
not? Let's do it.
sure. So, I think first thing is similar to the 10 investment loans that they have with FHA now. I think I would, first things first, I would maximize each spouse's
Yeah,
total
4 and 4.
investment,
Yeah.
yeah, allowance. 4 and 4, we each take it, assuming that our DTI is okay and we can both take on 4 in our own individual names. That would be my first
Yeah,
option.
that is awesome. That's exactly where you should have gone. I think the thing that I will go to is the signal it sends the market, right? I think this would be something, basically government overreach or whatever you call that, basically saying homes are meant to be lived in, not income, not rentals. Landlords are evil, kind of that talk track. Maybe even bring in um rent caps and all of these just crazy things. I mean, they could do things like this. I'm not calling for
Yeah,
it. I'm just playing what if.
right.
And I think the first thing that would happen is the market would slow down, right? Because last thing I saw from National Association of Realtors is investors are roughly 25% of the market. If you take away cheap rates, that will lower demand, which will soften the market. And maybe that's the goal of this potential change. But yeah, it would impact the market, I think.
Yeah, yeah, and that's your background, right, is economics, Zuber.
Mm-hmm.
So I love that you always bring that to the forefront of everyone's mind to really be aware of what's going on before just stepping forward and continuing to put one foot in front of the other,
Yeah.
in front of the other.
The
That's
rules
true.
changed. How can this ripple through? Yeah, because that it will
Yeah,
impact things for sure.
yeah,
Yeah.
you're really good at foresight. Um, Assuming the numbers work, right? The other thing is you can pivot to commercial real estate investing, which will have higher interest rates than residential loans, right? So commercial loans, excuse me. Um, and then the other thing too that I would say is that you can keep loans and do creative financing with subject twos, right? So that's the other option is you can keep subject twos in the owner's name and still take ownership of the property.
Yeah.
Yeah.
I think one kind of along that lines that I would go to is I think seller financing would be even more common,
Yeah. Oh
right?
yeah.
Because there's a lot of
Hmm.
mom and pop investors. Their property will always be a rental. It's in that part of town. It's on that busy street. Because if they were going to make it owner occ, they would have to kick the tenants out. They'd have to do a heavy uplift, a heavy remodel to owner condition, and they don't have the money. So their
Yeah.
outcome is I have to make it a rental. There's no financing. So I will seller finance. Because again, when you go FHFA or Fannie Freddie for loans, that doesn't mean you and I can only have 4 rentals. It just means we can only have 4 cheap rentals. So I would
Yeah.
think seller financing would actually go up because
Yeah.
there's a lot of mom and pop landlords that will just sell on seller financing, I think. So what do you think the final one is? Again, we've gone to 4 rentals in this, future event.
I think my last option, I would exhaust the others first,
For
right?
sure.
Is would be partnerships with others, right? So people
Ah.
that don't have the time, but they have the capital and can take on that loan, right? Be the name on the paper, the warm body on the paper, if you will. That is my last option. I would
Yeah.
exhaust the others,
All the other ones first.
I'm not, and I would also very much need contracts in place outlining what
Yeah.
if this, what if that, what if this, and being very descriptive in a lot of different scenarios. I've just heard different stories. I've heard positive and other not so positive in
Yeah.
partnerships.
I can tell everybody right here, right now, that's not on my list.
Yeah, at all.
I
Not even
no,
last, just not at all.
not no zero, not happening. I don't trust. Yeah, no, not
Yeah.
happening, not happening.
Yeah,
But
right.
yeah, I think the last one for me is kind of your second one. I just want to hit it again. I think I just go up to commercial, right?
Yeah.
Commercials, different paper, different rules, banks, community banks. When people hear Fannie Freddie going to four, they flip out.
Hmm.
But
Hmm.
you need to step back and realize there's plenty of money out there.
Yeah.
It's just, when Fannie and Freddie limits to four, they're just not going to buy that loan. Plenty of community banks, plenty of credit unions, plenty of non-QM lenders, plenty of hard money lenders will lend your fifth and sixth and seventh. It costs more, so you got to run the numbers correctly, but it's not the death of the market. But I trust me, if Fannie and Freddie came out and said we're only going to four loans again, the world would freak out. And they're like, dude,
Yeah.
just chill out. There's
Right.
plenty of money. Instead of paying 5.5, you're going to pay 7. Buy
Right.
a better deal.
Exactly.
Negotiate creative financing. It's okay. I, there was a decade of my career I couldn't get bank financing because of that 4 loan limit.
Yeah.
We did lots of deals, lots
Right.
of deals. It's really
Right.
not that big a deal, but people would freak out, I think.
Yeah, totally agree. We just you just learn more. You introduce yourself to the commercial side of the credit union that you've been using, and that's all we did. We're using the residential side of the credit union. We introduced ourselves to the commercial side and said, "Hi, we've done residential loans with you. We have to move on to commercial. Nice to meet
Yeah,
you."
there you go. Yeah, the other crazy thing you could do is you could go get your 4 loans. That you could go to your commercial bank, do a portfolio loan or a blanket
Exactly.
loan on all 4. Now those are out. Now you go back and get 4 more. There's all these things you could do.
I that is such a good point, Super, because that does count as one loan. That is
Yeah,
such a good point that you just raised. We had something very similar recently where they were counting what we've got going on, and we had a couple portfolio loans, so it didn't matter how many properties were in there. So there's always ways to kind
1.
of.
Yeah,
That's right. You're exactly right. Great
there you
point.
go. Well, at least you have an amazing Instagram page which people need to follow. What is it?
Please do. You can find me on Instagram at Investing for Financial Freedom.
And do me a favor, folks, when you follow her today, send her a note that you came from one rental at a time so she knows her time is valuable. Thank you so much.
Thank you.
Mhm.